Our next guest says the Verizon bonds look great today, but might not be the best opportunity a year from now. She's Kathleen Gaffney, portfolio manager of the Eaton Vance Bond Fund. Kathleen, thanks for joining us. You just heard us talking with David Faber, who's saying that all the smart money is flowing into this Verizon bond. Tell us why you think investors shouldn't follow suit.
It was a very hot deal and very much in demand. And I think it speaks to there's an appetite for yield, for looking for sources of income. But if you think about where rates are headed over the next, say, 3 to 5 years, do you want to hold on to a bond that's yielding 5.20 today if treasuries are also going to be yielding 5% 3 years from now?
All right, so I've got to ask the question, Kathleen. Did you go in and buy some of these bonds today?
I'm an investor that really takes a long-term view. So again, I've got a longer time horizon, and I think there are better sources of income and total return out there in the marketplace today.
So like what? What are you saying? And also, so you are a long-term investor. You still get your 5%, going back to your first point, you still get your 5% at the end of the, when that bond comes due, right? You didn't lose any money.
Right, but the point is, if you hold it to maturity, which is 10 years from now, talking about the 10-year bond, they did, as David mentioned, have many different offerings, but I'm talking about the 10-year. So you've got to hold on to it for 10 years to realize that 5%, 5.20% annual return. Now, interest rates are going to be who knows where 10 years from now. They could be at 8%. They could be at 10. And you might not be so happy to have that 5.2% bond. The question really is, as David pointed out, is Verizon a good credit, and are you getting paid for that risk today as well as a year from now?
Do you think Verizon is a good credit? In other words, another way to put it is, if I'm comfortable with the idea of getting 5.2% as a benchmark yield over the next 10 years, and I'm comfortable with the idea that I'm going to hold that bond for that whole time, would that be something that you could counsel someone to do?
Well, I'm a bond manager, and I'm looking at all the opportunities. I would ask whether you want to hold that bond for 10 years, and if you're going to hold it and go to sleep and not worry about it at all, sure. It's not a bad investment today. I can't tell you what Verizon is going to do, what the industry fundamentals are going to do over 10 years. There's a lot changing in technology that may potentially change that credit risk. And so you might actually demand more than a premium that yields 5.20 in the current market. You might demand a lot more 3 years or 5 years out.
Kathleen, real quick question. We don't have much time left. So interest rates are going up. Are bonds a good investment overall? Forget about the Verizon thing for a moment.
High-quality bonds and treasuries have a lot of interest rate risk right now, which should be a concern for investors. Fixed income and looking for other sources of income is available in other sectors, such as floating rate, high yield, convertible bonds, and other non-U.S. issuers that offer good yield advantage right now.
Okay, fair enough. Thank you so much, Kathleen. Kathleen Gaffney, portfolio manager of the Eaton Vance Bond Fund.